David Stryzewski joins me now. All right. You know I hate this, but we've got another week of Fed watching in front of us. Why don't you be the Fed watcher of the day and you tell us, what are you expecting from the Fed tomorrow and Wednesday?
Well, good morning, Stuart. Expectations from the Fed are that they're going to continue to raise rates just like they've told us. In fact, I think there's probably like three primary opinions about what the Fed's going to be doing. We got what the stock market thinks, what the bond market believes, and then what reality is ultimately going to be. And so, the stock market thinks that we're going to be getting a pause and pivot, which is why we've seen 3 bear market bounces here over the last 12 months. But the bond market's telling us a little bit different of a story. In fact, if we look at the difference between the 3-month Treasury and the 10-year Treasury, that's the largest divergence that we've actually witnessed here, at least within the last 20 plus years in that particular area. And then we've got kind of reality. So, the reality is that consumers are just hanging on right now. If we do ultimately get to this pause and pivot time frame, we should be concerned because that's typically followed by a negative 35% in the stock market over the following 15 months. And so, we're not in an awesome place right now, but just using some basic schoolyard math here, if I was picking teams, I wouldn't want to be against the Fed right now, as the stock market's making a choice to be.
Okay, you would not want to go against the Fed. In other words, you would not want to bet that they are about to pivot and lower interest rates. You don't think they're going to do that?
That's correct. I think that they're going to be higher for longer, which is ultimately, what the sentiment and they continue to say. So, the ISM indicators, by the way, take 15 months to ultimately inflect. And so we're just starting to see that right now with these higher interest rates. And so I think that we're going to see an earnings recession coming up here. And I think that the math is just coming out right now.
All right, we'll put you in the negative column. David Stryzewski, thanks for joining us. We'll see you again soon. Now, the market is doing all